Today is Thursday, March the 28th, and really, there's not a lot going on in the stocks that I've been tracking. The advancers over decliners, 62% to 32%. If you look at the McLennan index, not updated for today, it's just sort of trending right around the zero line, but I want to take you back and just look at this chart. This is the same chart, but I want to show you the trend over the last year. From last March, you had a low beyond this median range where it spends most of its time, and it popped out of there for one day, and then it made a drive up to the top of the median, then came down, then it channeled throughout the whole summer into September and October. Then it dropped again below. In October, it dropped below the line. This time it shot up. It exceeded for one day the median, then it came down, then it bounced to the median again, and then at the beginning of the year, towards the end of December to January the 4th, we had our third drop out of the median, and then we shot all the way up to this peak, and then did three cascades to come down to exceed this median by one day. And now we've got this area here. So I'm wondering if we're not coming into an area where we're just going to be up and down without any extremes, possibly for several months, until something happens with the economy. Because on one hand, people say the economy is booming, jobs are great, but we just had a fourth quarter GDP of 2.2%, not stellar. And they're talking about slowing global economy due to tariffs and other factors. And remember that FedEx had their warning that they see tougher road ahead to earnings. So I'm just getting ready for a bit of nothing. And let's go and take a look now at just two charts. Let me just close this. Just two charts. The S&P, which really did nothing today. And if we looked back at the FinViz chart, we just saw that the Dow made its high on the first candle, never achieved it again throughout the day. NASDAQ had a different shape, made its high around 10 a.m., never got back to it again. The S&P 500 made its high at 10:30, never got back to it again. So although the days ended up over prior day, we were down off of our highs. And that's the second day in a row, maybe longer, that we've seen that. On a weekly chart for the S&P, still struggling to get out of the cloud. And here we've got our Chiku span, still going to have trouble getting through these candles and through this 50-day moving average. So we're bound between the 200 and the 50-day moving average, bouncing around. Apple is the only other one we're going to look at today, because really not a lot happened in our other main stocks. And we're, again, just a flat pattern here. If we look at it on a weekly basis, support still on the 200. What I said yesterday was, let's see if we can't end the week off of the 200, or are we going to get support on the 200, or are we going to lose it? We're just a little bit lower than it now. Actually, we're right on it. Finish the day right on the 200. So let's see. I'm still short puts. I did not roll my puts into next week. I'm going to have to, because they're 192.50s. At this point, if I roll them for 2 weeks down to the 190s, expecting flat churn for a couple of weeks, I would have to give up maybe 10 cents of what I've collected, which is not a big deal, because I'd be getting back a further protection of $2 before having them put to me again. If you don't understand what I'm doing with the Apple puts, it's really quite interesting. Just leave a note in the comments and say that you'd like me to explain it, and I'll open up my books to you and show you how I've been collecting premium. In other words, making money off of Apple when it hasn't really been, well, it's gone from 170 to 197 at one point. Now it's 188. So it hasn't done nothing, but I've been able to make money on it without holding any stock.